money. Trading is nothing but the exchange which is happening in the market in the form of money. Just the form is money here. You're aware that good old days we have something called as barter system. So you have something excess, you give us, and we have this, we are growing this crop, and then we are going to give you that. It's exchange, trading happening. Okay. All right. Now let's see. Let me share the screen and okay. So now I'm going in the https in.investing.com. Okay. So this is until you open your account with the broker. I'm going to tell you how to do that and all that. So this is the website which you will be working on, right? So this is the investing.com. So what do we get here? This website has all the whatever, if you want to check the live market or any latest update, data, everything it has. So now, for example, let me show you one thing. So there is a charts and you're going to the live charts. Okay. So here, whatever you're currently seeing is the USD INR chart. Now tell me one thing. Now just let's focus on the what I'm going to write on this. Okay. Consider you have a set of data in an Excel sheet. So wherever you're working or whatever business you're doing, consider you have a set of data in an Excel sheet. Now you should have a way of representing that data in the form of a graph so that everybody understands it. If I just give you, say, for example, if I tell you Reliance performance is there in this Excel sheet, and you can just go ahead and see that, and I just say, I just mark, okay, this date, this is the this is how it has traded, and this is how the share price of the Reliance has fluctuated. And yesterday this was the fluctuation, and day before yesterday this was the fluctuation, 1 month back this was the performance. If I just give that in terms of the price or the points or the data, it is not enough to analyze the market for any data for that matter. Now the organization where we work, there is a attrition rate, what we actually present to the management, isn't it? How many people have left the company, and how many have joined, and how many in the management group, how many in the the beginner, whatever the level 1. So all that, if I just keep telling them the numbers, they may understand, or it's like they check out. So if I have to really give them the overview of that, what is happening, then it is always represented in the form of graph, or that they can see, and the visual thing has to be there. Agree with me? So similarly here in the stock market, now if I just open this and ask you what are these prices, it's not easy to understand this. But instead, when I say, how the USD INR, it has gone up from this point to this point, and from here to here, how it has come down, then you understand that, because it is a very clear graph representation of the fluctuation or the variation of the stock price. Okay, so this is what we are going to do. Now this is the base. Okay, and here you can give whatever stock name, whichever you want to analyze. This is the edit box. So once you give that particular charts gets loaded, we are going to see what are these green colors and red colors. First of all, what do we call this whole chart as, and why technical analysis is so important, and especially this particular chart helps you to earn very good money. There are other charts as well. If you see, if I just click on this, this is area. So I don't understand anything here. It's just all mountains and the peaks, isn't it? So why we go for this? Generally, 99% of the people who are into technical analysis, they go for this chart. Okay, all right. So this is what we are going to do. Now coming to the next. So what is a stock or a share? What is a stock or a share?
That's the ownership or that's the asset of the company.
Yeah, okay. Great. Any other answers?
The company capital, they divided into shares.
Yeah, got that. Okay. So why do you think that they actually give the public the stock options? Like, they say, okay, now this is listed under an SE. My company is listed under an SE and we are going for whatever, IPO. And then the trading starts, right? That comes as, you can even trade you in that stock. Why is that? Why do they expose these stocks to the public? You buy this share, it's going to go up because we have tie-ups, we have some acquisitions coming in, whatever, right? It's because of the investment what they need, isn't it?
Yes.
Yeah, because of the investment they want to go big. That's why they do that. Yeah. So now, when you buy any stock, when you buy any share, stock and share, interchangeably we'll be using this term. So when you buy any share, it is like you are holding that with you. So you become a part of that company, even if it is one share, it's very, very, very negligible, but still you are going to become a part of that company. Okay. Till what time? Till you sell that. So every transaction is a buy plus sell. Any transaction you take, the transaction is set to complete only when there is a buying happened, and whatever you have bought, those you have already, you also have to sell them. Then only we can realize the profit. Say, for example, a particular ABC stock, I'm going to buy it for 200 rupees. Okay, then this is my buy. How to buy? How easy is it right now when compared to the good olden days, where we had the even the stocks we used to get as a the what do you call, on the paper. Yeah, because technology was not so advanced at that time. Over the counter, you used to get the stocks, and we used to go and buy and keep it with us. It's like kind of a bond paper we used to get. And that was the good olden days. That was. Now just within one click, it's done. For example, there is a Z Entertainment Limited here. Okay, this is the stock. So I can just say buy, one click, and I can buy it. Quantity one, I want to buy one quantity, one stock, and which is costing, say, something like this. All that we will discuss, and what is this, and all that. Okay, and just say buy. If the market is open, it is bought at 298.9. Then once it reaches to some value, again, where my technical analysis tells me, okay, now it has reached to 310. Now you got to exit. What we are going to do? Go here, sell them. Whatever you have bought, sell them. What price? 310. Why? Because the analysis showed that. How easy is it? What all you have is only one laptop or a desktop. I don't prefer doing it on mobile because that becomes an addiction. I was whenever I was driving, traveling, I used to park my car and used to check. So that become like, what the hell am I doing? I'm not completely there. What for what purpose I'm going there, and indulging in this activity. So I really don't recommend you to have that particular whatever profile on the application on the mobile. Have a the laptop or a desktop and an internet connection. You can go wherever you can trade. All right. So now again, coming back to this. So 200 rupees is what I bought. And then say it reached 210 and I'm going to sell them. So 10 rupees profit is what I got. Now here what happened? The technical analysis told me that it is going to go up from 200 to 210 is what it is going to go up. So it is better you buy at this price and sell it at this price. So both the values are fixed and we have a formula to calculate. Okay. Now the other company, say XYZ, that tells me that the stock price is going to come down now. The price of the stock is going to come down, something like this. Now, what should I do? Only when I buy, I make money? Or can we make money even when the markets are going down? What do you think?
Both.
Both. Isn't it? Because as a trader, that is the advantage, isn't it? So when you invest in a particular company, what happens is, for example, I would like to invest in Infosys. What I look forward for from the Infosys? One is the fundamentals of the company, how strong it is. And what is their revenue, how their balance sheet looks like. What is the debt? All that I have to see. And how old is the company? And who are the promoters? Who are the directors, shareholders? How much foreign investment is there in that company so that I am safe, my investment is safe. So when I am an investor, when I talk about the investor, it's a long-term relationship with this company. I directly or indirectly emotionally attached to that company. I always wish for their share price to go up. Okay. And I expect a dividend. Whatever. See, whatever happens, because I'm a major investor, or not even that, if I have bought, say, 2,000 shares of Infosys, then I expect that to go up. Isn't it? That's the story of investor. Now, as a trader, we have an advantage of whether the market goes up or down, whether the stock price goes up or down, irrespective of that, we can make money because the duration which we invest in the market is very, very less, especially in intraday. What we are going to talk about, it is just 15 to 20 minutes. You are out of the trade, you're out of that investment and realizing your profit. That's the beauty of intraday. Now the question is, whatever rules we are going to follow here, will that be applicable for even the long term? Yes, of course. Because the strategy is derived from demand and supply. Market is always based upon the fundamental, which is the demand and supply. There is no unidirectional market anywhere I have seen, continuously just stock price going up in one direction. Okay. All right. Now coming back to this, now XYZ company, I get an indication through the technical analysis or the strategy that now the price is going to go down. Now what I'm going to do, I'm going to sell it first. So my first action, what I'm going to do is I'm going to sell. So this is a Z, what we have. Now consider that I got an indication somewhere here that it's going to go down. That indication itself is a strategy what we will be talking about. The whole course is that. Yeah. So I get an indication from this point, and then from here to here, I got to be exiting somewhere here because it is a pre-calculated where I should be exiting. When I say exiting, completing the transaction. So when I know that, then what I'm going to do as a trader? I'm going to sell it first. I'm going to sell it and then buy at the lower price so that I still make profit. So I'm going to sell it first and then say, for example, when it comes to 280 rupees, I'm going to buy them. Now, if you see the difference between these two calls, this is called as a buy call because we first bought them and then we sold them. This is called as sell call because we first sold them and then bought. All right. Okay. Now, if you carefully observe here, the difference we got to know. What is common? The common is buy price is always less than the selling price. Here, buying price is always less than the selling price. Here also the buying price is less than the selling price. The difference is what action do we take? Here buy, then sell. Here sell and then buy. So now one thing is very, very clear. As soon as we come to know that the markets are going up or the stock is going up, say Zeal only, for example, it's going up, I would go immediately place this call. And as soon as we get an indication that it's going to come down, you go and go for the sell. So there are two types of calls. When I say calls, it is investing again. Okay. So what are those? One is buy call. It is also called as long call. When I say I'm going long in Reliance, it means what? I'm going to buy the Reliance shares and then sell them. It means what? The Reliance is going up. Okay. So there is another one which is called as sell call, and this is also called as short call. I'm going short in Zeal because I got an indication that the Zeal is going to come down. Now understood. Why am I repeating this? Because these are the terminologies which we'll be using. And you can stop me anytime and ask, okay, what is it? There's no harm in that. Clear? Now, did you get what is the difference between an investor and a trader? Investor is associated with the company for a longer duration of time. He is somehow emotionally connected to company. It really matters to him that company shares have to go up, so only he can make money. But for trader, it really doesn't matter whether it goes up or down. We are making money anyways. Yeah. Any questions here? No questions. Okay. Now let me see again, as I said, all these things are in detail. We will be talking in the upcoming session. So don't worry, even if it's not going into your head or if you're confused and too much you're feeling, because I just want to give a feel of, what is this, the whole course is all about. Okay. Yeah. So that you get a fair idea about, how is it going to go and what and all one needs to focus on or, study.
Yeah. So sorry if I'm jumping. So how, I mean, we'll also be learning, like, is this the bottom, or, and is the market in like sideways or consolidation and we should not take any trades, or yeah.
We'll be doing that. Okay. All right. Now, I just told you that there is we also look at how much is the foreign investment which is coming in. And how many of you know that it's very mutual? So now, after this, the market globalization, whatever happened, right? So now every price depends on the overall performance of the market. Okay. Now the Indian market timings, Indian market timing says 9:15. So when I say 9:15, do you think only during 9:15 and whatever the closing hour is there in that time only the stock price fluctuates? No. It is 24/7, 365 days. Till the company exists, the stock price is fluctuating or varying. For us, for the technical analysis, whoever is doing, for us, the markets are open or we are allowed to trade in the market only between 9:15 to 3:30 p.m. Now, once the market closes, do you think the stock stops fluctuating? No, because there are other markets, other investors who are investing in Indian market. Okay, there is some deal which is going on. Because of that, share price increases. Hundreds of reasons are there. Just that we are allowed to trade in the open hours of the market, which is from 9:15 to 3:30. Here. Now, how many markets do we have? One is the equity market. Equity consists of banking sector, oil and gas, IT sector, pharma sector, auto. So all these are equity. Now there is something called as commodity as well. We'll just give a basic introduction about the commodity of, what is the time and, what to be traded and all that. So commodity market. So why we are giving all this? Because we as a TradeViz, we don't want to listen to any of the reasons at the end of the course that I don't have time, I don't have capital to invest. Because you're investing your time, energy, and your effort here. Money as well, right? So commodity is what? We have a couple of agri commodities like, cotton, cardamom, even they can be traded. And we have non-agri, which are gold, silver, bullion metals. We have zinc, lead, crude oil, natural gas. How crude oil, any fluctuation in the crude oil impacts here. You know that. We are actually going through that phase right now because of the war or whatnot, right? So that's the commodity. Now, people who are not getting time even in commodity or whatever it is, there is a currency market. So currency, when I say it is INR versus any currency. INR currency trading is legal in India because it is with respect to INR.
Is it Forex or?
It is not Forex, it is currency, we call it as. Forex is between the two foreign currencies. We also have a Forex, though SEBI says it's illegal in trading in Forex, a lot of people are getting into Forex trading. Okay, there are safe wallets, there are safe brokers who can actually enable this service for us. There is a Forex trading, which is GBP versus INR. Sorry, GBP versus USD, because when we call it as Forex, when both the currencies are the foreign currencies. Okay. So GBP USD or, USD JPY, Japanese yen, Euro USD. So these are a couple of pairs which are very popular and very volatile stocks. All right. Now, even that is not possible. There's a crypto. There is a crypto which is getting popular. So you have options to invest in any of these. Depends on your capital and also time.
So which one is good for intraday?
All of these.
Volatile. Okay.
All of these. Intraday depends. And now I'll just take my example. When I was going to office, okay, so I never got a chance to trade in the office because, you know, all these broker things and all blocked there. And even it's not good to do. So I used to come back home and I used to, you know, invest in crude oil and zinc. Those two were my favorites. And, you know, I used to come back home 7 to 9 o'clock. I used to spend 2 hours and I used to do it in only commodity. Now, during pandemic is where, you know, the Nifty Bank, Nifty 50, which is the equity Indian market, there where we are trading. So it totally depends on. So what I'm trying to say here is the strategy remains the same. Entry criteria remains the same. Only thing is it is up to you. Where, how much capital do you have? Because if I want to simply trade in gold, I need at least minimum of 2 lakhs, isn't it? So do I have that much capital is the first question. Now, no, if I don't have, or I don't want to try because I'm a beginner, then go for Forex or crypto, where even you can start with, say, $10. As low as $10 you can start. And equity options, you can start with, say, 8,000 or 10,000, even 6,000 also. So it completely depends. So you have to plan, you know, if you have meetings so you can't invest, then when can you do that? Weekends, crypto, 24/7, 365 days round the clock, it is running. Really doesn't matter. Saturday, Sunday, 2 hours, well and good. Okay. All right. Now, so we were talking about the, how do we see the foreign investment, right? So let me just show you that. There is a website called as screener.in. Why is it like this? Okay. So here I can type any company name. For example, I'm typing Axis. Axis Bank. It is not showing properly. Let me open the Chrome. Not sure why it's not opening. Okay, so just go and check. There is a website called as screener.in, wherein you will actually see the investment from the foreign investment also. Yeah. So let me just check. No, it's not coming. I don't know what is the issue. Otherwise, it was a very beautiful UI. It's not coming. Let me also check that. Or probably next class we'll see. I'll just try to see, is it in this laptop or okay. So there is a section called, the shareholder pattern. You get anything you give in this box, right? You get that company's every other detail. Balance sheet, all that, who are the promoters name, how much are they holding right now, everything you will get. So in that, if you go to the last session, which is the section, which is the shareholding pattern, there you get, the how much is it, the foreign investment which is happening there. Those are the stocks which are recommended for the long term. If you want to say buy and hold it for 6 months, 8 months, 1 year, then look for the FII section where the foreign institutional investors have invested there. Okay, that's what I just wanted to show. Anyway, let's check it in the next session. Okay, now coming to the last part. So what are what is that we are going to ultimately doing at the end of the course? Okay, so we are going to introduce something called as options. There are 3 ways of getting into a market. One is straightforward, as I explained here. It is the, you buy and sell. This is called as cash market. Okay. There are other markets which are called as derivatives futures, derivatives options. So the strategy remains same for every kind of whether you trade in derivatives, option, futures, or cash market. That the entry rules remains the same. Exit differs because investment varies. Okay, and also depending on the market, of course we already spoke about what is the capital and all that, but the rules are the same. Rules are the same. Once you learn, you can go and invest in any of these. Okay, so now for example, if you take this as an example, Z, okay, actually if you want to invest in Z, yeah, so 298.9 is what is our investment. Yeah, 298.9 is our investment. Now I feel that 298.9 is expensive because I'm not going to buy only one stock. No. Yeah, I'm going to buy say 1,000 or 2,000 quantities, right? So when I go and do that, the investment is very, very huge. For example, say I buy 3,000 quantities. Now what is the investment here? 1,80,000. I feel it is too much. So do we have any other ways where the quantity remains the same, but I can get it for a lesser price? And the percentage of profit or the gain what I'm going to have is equal, or it depends on the, say for example, on 3,000, if I'm saying 2% is what I want to earn, the 2% should remain the same, but investment should decrease. So is there any way? Yes, of course. So there where the options come into picture. There where the option come into picture. Say for example, if I just open this side by side, I will split this chart into half, and here is the ZEAL actual stock which I have. Yeah, you can see this. Okay. And then this side, let me just open this. I know why this March 250 CE, what is the meaning of that? All that we are going to in detail study from the scratch. So from ABCD we are going to study. So don't worry. I'm just showing you what is that potential we as a retail traders have. Okay. So now if you would have bought here, for example, there is a indication that there's an indication means the entry that says that 281 is your buy price and you can sell it off somewhere here. That is the indication what we got. So 9:30, you can see the time here. 9:30 is the buy price, and 9:40 you can exit. So buying, selling over within 10-15 minutes of market open, your trade is already over. Rest of the whole day you're free. Now, but the investment is huge. No, I don't want to do that. What's the other option I have? I can invest in options. Now, what was the option price at this point of time when I said 9:15? So where is the 9:15 here? This is the 9:15. Sorry, this is the 9:30 candle. Where is the 9:30? 9:30 is here. So what is this price? 46 rupees. Can I invest 46? Yeah. 46 into 300? Of course. It's far better, much better than what I'm going to invest here, right? So if I just go here and say buy and 3,000 quantity, and for how much rupees? 46 or 47, whatever price it is. So what will be the margin required? So this is showing wrong because it is expired today, Thursday. So just multiply this by this. Okay. So that is the investment what I'm going to have. Whereas here we saw, what was the investment? 281, right? 281. This was the investment. Okay. Yeah. So now 46 was the buy price, and then consider that we generally say that 5 and 7% is what you're going to exit. That's the rule. Okay, 5% and 7%. In what case 5% and in what case 7%, we'll discuss more about. So consider we are saying that 5% you exit. 46 is your buy price. 40 on top of 46, if you have to add 5%, then how much is that? How much is that? 4.6 is the 10%, 2.3. So add 2.3, add 2 rupees 30 paisa to 46, or where whatever your buy price is. So 48.8 or something like that. Okay. Where it has given that? Here itself. Within 5 minutes, you got your profit. That's the beauty of options. Okay. Options have their own limitations also, and there are pros and cons. Okay, anything you take, any system or anything you take, it will have its own advantages and disadvantages. Options are very, very beautiful instruments, provided when you trade them properly with a proper analysis. It is not for the people who just want to try and they just want to get into a market and they just go through some video and okay, let me just invest here, let me try that. That's not for them. Options have to be understood in and out. That's what we are going to have here. And ultimately this is what you're going to do. So left side you will be comparing this chart, and right side you will be taking the trades. This is not your investment, but this is the investment. And on that investment, you'll be calculating 5%, 7%, then 10%, 12%, how to take different targets.
So every stock has an option?
Sorry?
Every stock has an option?
Most of them.
Oh, okay. Is this not like calls and puts? Is this calls and puts?
Yes, calls and puts.
Oh, okay.
C is call European, P is put European. Yep. The same thing. I mean, these have expiry, monthly expiry, weekly expiry, whatnot. So many things are there. We'll see all the difference between all these three. What they. Yeah, Rekha, you had a question.
Yeah. How to do in 250C, ma'am? In ZL22 March is in this chart. Okay. And how to do trade in 250C, ma'am?
What do you mean by that? I didn't get your question.
Yeah, we are seeing a ZL 22nd March chart, ma'am. And this side we having ZL 22nd March 250CE. Okay. How to compare, ma'am?
No, this 250 is where it is right now trading. So don't take that. That's what I'm saying. So this needs understanding of the options. Okay. 250 is something which we take from here, and then we select this. See, if I just see here, no, Z.
Yeah.
If I just go type March, now how many C's you're seeing?
Yeah, so many.
Yeah, so it depends on where exactly it is trading and which one to pick up.
Okay.
Okay. All right. Any other questions, Murli?
How will come down the prices?
Sorry, how?
It will come down the price. Share value goes down. So now, how it is?
Okay, now let me give an example of this vegetable mandi. Okay, what we have. Say for example, morning when we go, when it's a peak time. So whatever we are getting, whatever the price. Now at 10 o'clock you go, 10 a.m. Okay, so they will be actually shouting that okay, we are giving it for the less price, and we are giving less price. You come and buy with us. Why is it so?
Those are all freshness or else something over what is it called? Oversupply also, no?
Yeah, exactly. Oversupply. Supply is more. Morning demand was more.
Exactly.
When at 10 o'clock, when you go at early morning at 5 o'clock or so, the demand was more.
Mhm.
So people were actually buying how much ever they were charging. But now at 10 o'clock, because it's a vegetable or whatever, they just want to get rid of that, the supply. Now supply is more,
Mhm.
demand is not there. So what is, okay, 10 rupees less I'll give.
Okay.
So whenever there is a more supply, the stock
Mm.
value comes down. Whenever there's a high demand, for example, first day first show, Puneet Rajkumar movie released. Okay. Now the ticket price are 300, 400, 500. That too,
Mm.
especially when you go on Saturday, Sunday, it is even more.
Mm.
Okay. And then we used to go from the office. No, sometimes when there is not a lot of work, no, we used to go from the office nearby Wednesday or Thursday morning show. 11 o'clock or 12 o'clock. There the prices used to be same 100 rupees. Where in weekends,
Mhm.
350, 400. Because the demand is less. He has all the seats
Mm.
available and only some people are going. So supply was more and demand is less. So he was giving it for the lesser price. But what happens on Saturday, Sunday or first day, first show? Everybody wants to see that movie on the same day. And he has only say 150 seats and there are 300 people who are booking the tickets. So demand increased. Same thing happens here. Buyers and
Okay.
sellers. Okay. Yeah. Got that. Very good. So anything else or we'll wind up the session? So all are excited.
Yeah, definitely. We
Sam,
learn
what's the time
something.
there?
It's 11 here, 11 in the morning.
Okay. So it's okay for you. There's one person who attends from, this Dubai. For him, no, 2 classes he came and then he was not able to attend because of the time. Like it's 5 o'clock early in the morning, 5:30, and he says, "Oh, madam, you know what? I'm not able, though I keep alarm, I'm not able to get it." So I just asked, it works for you. Yeah. Okay.
Sure.
Got that. Rekha, clear. All right. Okay. So I'm going to share this recording and I need all your Gmail IDs. There are a couple of people who are going to join from the next session. So for them also have to share this anyways. So I need your Gmail IDs. Please post it in the group. Okay.
Yeah, I already given that Gmail ID.
All right. All right.
Okay.
Okay. So thank you.
Thank you.
Thank you. It was very good session.
Got that, Sam. Thank you. Good night and have a great day, Sam.
Thank you.
Yeah.
Bye-bye. Yeah.
Good night, all.
Night.